Good evening and welcome to tonight's debate on AI TV. Our topic for tonight is investing in Bitcoin versus investing in gold as a reserve of value. Joining us tonight are two experts in the field, representing opposing sides of the debate. Dr. Jackson, you will be arguing in favor of Bitcoin, while Mr. Johnson will be arguing in favor of gold. Dr. Jackson, we'll start with you. Why do you believe that Bitcoin is a better investment than gold?
Thank you, Lisa. There are several reasons why I believe that Bitcoin is a better investment than gold. First and foremost, Bitcoin is a decentralized digital currency that operates on a blockchain. It is not controlled by any government or financial institution, which makes it immune to inflation and political interference. Second, Bitcoin is a finite resource with a maximum supply of 21 million Bitcoins. This scarcity makes it a valuable asset as demand for Bitcoin increases. Finally, Bitcoin has proven to be a good investment over time, with a historical return on investment of over 200%.
Mr. Johnson, what are your initial thoughts on this theme? Do you see gold as a better reserve of value than Bitcoin?
While I can see the appeal of Bitcoin as a digital currency, I believe that gold is a better investment as a reserve of value. Gold has been used as a store of value for thousands of years and has proven to be a reliable asset in times of economic uncertainty. Unlike Bitcoin, gold has a tangible and physical form, which gives it intrinsic value. Additionally, gold has a long history of being used as a currency, which gives it universal recognition and acceptance.
While gold does have a long history as a store of value, it has several disadvantages compared to Bitcoin. First, gold is difficult to transport and store, as it is heavy and requires specialized facilities for storage. Second, gold is not easily divisible, which makes it difficult to use as a medium of exchange. Finally, gold is subject to manipulation by governments and financial institutions, which can artificially inflate or deflate its value.
While it's true that gold can be difficult to transport and store, there are many companies and institutions that specialize in providing secure storage for gold. Additionally, gold is a universally recognized currency, which means that it can be easily exchanged for other currencies or goods. Finally, while governments and financial institutions can influence the value of gold to some extent, they cannot manipulate it to the same degree as Bitcoin, which is subject to price volatility and market speculation.
While it's true that Bitcoin is subject to price volatility, this is not necessarily a disadvantage. In fact, Bitcoin's volatility can provide opportunities for investors to make profits through buying and selling at the right time. Additionally, Bitcoin's volatility is decreasing over time as the market becomes more mature and institutional investors enter the market. Before we conclude, I would like to add that while gold has a long history as a store of value, the world is rapidly changing, and digital currencies like Bitcoin are becoming increasingly important. As we move towards a more digital economy, it's important to consider the potential benefits of investing in decentralized digital assets, like Bitcoin.
I agree that Bitcoin's volatility can provide opportunities for investors, but it can also lead to significant losses for those who invest at the wrong time. Gold, on the other hand, has a much more stable and predictable value over time, which makes it a safer investment for those looking to preserve their wealth. To conclude as well, while it's true that the world is changing, it's important not to dismiss the value of tangible assets like gold. Gold has stood the test of time as a reliable store of value, and there's no reason to believe that this will change in the future. While Bitcoin may have some potential as a digital currency, it's important to remember that it's still a relatively new and untested asset compared to gold.
Thank you both for your inputs. For summarize, here are 5 takeaways from the debate on investing in Bitcoin or gold as a reserve of value. Bitcoin has the potential to provide significant returns in the long run, but it is subject to high levels of price volatility and market speculation. Gold has a long history as a reliable store of value and is a safe haven asset in times of economic uncertainty. It is also a universally recognized currency. Bitcoin is a decentralized digital currency that is not controlled by any government or financial institution, which makes it immune to inflation and political interference. Gold is a tangible physical asset that is immune to the risks associated with cyber attacks and technological failures that can impact digital currencies like Bitcoin. Both Bitcoin and gold have their advantages and disadvantages as investments, and investors should consider their own financial goals and risk tolerance before making any investment decisions. Thank you, Dr. Jackson and Mr. Johnson, for your insightful arguments. Now, it's up to investors to weigh the pros and cons of investing in Bitcoin versus gold as a reserve of value. Remember to do your research and seek professional advice before making any investment decisions. Thank you for joining us tonight, and we'll see you next time on our debate series on AI TV. Don't forget to subscribe our channel for more content like this.